In the private sector, the ultimate measure of success is straightforward: generate a profit. Firms do this through exchange transactions. A customer pays cash, the firm provides a good or service of roughly equal value, and the margin between cost and price drives the bottom line. Public sector entities operate under an entirely different mandate. Their primary objective is service delivery for the public good. To fund those services, governments rely on involuntary taxation. These are non-exchange transactions. The taxes you pay do not directly correlate to the specific volume of roads, defense, or social benefits you receive in return. This creates an immediate accounting problem. If you remove the pursuit of profit and the direct exchange of value, the traditional mechanics of measuring performance break down. Standard corporate accounting frameworks lack the structure to capture the financial reality and performance of sovereign states. Professional practice often involves looking at a government's surplus or deficit and treating it like a corporate bottom line. But a massive budget surplus tells us nothing about the effectiveness of national security, the functionality of infrastructure, or the quality of education. This is why the International Public Sector Accounting Standards Board, or IPSAS, developed a specialized conceptual framework. At the center of this framework is the General Purpose Financial Report, or GPFR. It is the primary mechanism governments use to communicate their financial health transparently to the public. Moving a government to accrual basis accounting requires a complete re-engineering of the GPFR scope. To understand how public sector entities actually report their performance, we need to construct this GPFR framework from first principles. Mapping raw financial data to democratic accountability involves abandoning private sector assumptions and building an entirely new structural model. Building this framework requires establishing the unique operating environment of a government. The first constraint is the sheer volume and significance of non-exchange transactions. Because funding is largely involuntary, standard market metrics for evaluating efficiency do not exist. The second environmental constraint is the approved budget. The approved budget functions as a strict legal mandate that authorizes a government to raise and spend resources. The third constraint is the extreme longevity of public sector programs and the sovereign state itself. Government decisions made today dictate the tax burden and the availability of services for citizens decades into the future. Involuntary funding, legal mandates, and multi-generational lifespans invalidate the foundations of private sector reporting. This environment dictates who actually needs the GPFR. The framework identifies two primary users: service recipients, the citizens, and resource providers, which includes taxpayers, donors, and lenders. Legislatures and parliaments act as the representatives for these two groups. Unlike private investors or internal corporate management, these users lack the authority to demand custom financial reports from the state. Because they cannot request specialized data, the first objective of the GPFR is accountability. Public sector accountability is the obligation to prove that resources were managed legally and efficiently to deliver promised services. The second objective of the GPFR is decision-making. Citizens use this information to inform their voting preferences, while lenders rely on it to evaluate sovereign debt risk. Because these primary users cannot demand custom data, the GPFR must serve as their sole comprehensive analytical tool for both accountability and decision-making. A traditional balance sheet and income statement cannot fulfill those dual objectives in the public sector. This requires the GPFR to adopt an expanded scope, separating standard financial statements from a broader category of supplementary information. The first supplementary layer is budget compliance. Reporting actual results against the original budget is the primary way a government demonstrates legal adherence and financial discipline. The second layer is service delivery achievements. Financial performance must be contextualized by non-financial metrics, like the volume and cost of services provided, to prove operational effectiveness. The third layer is prospective financial information. Social benefit programs span multiple generations, which means the GPFR must forecast future resource needs and long-term sustainability. Current decisions are evaluated based on their impact on future demographic tax bases. Public sector performance measurement requires historical financials, legal compliance, operational outputs, and future forecasts to be integrated into one structural report. To ensure this expanded data remains reliable, the framework applies qualitative characteristics as a strict filter. The first essential characteristic is faithful representation. This requires neutrality and prudence, especially when estimating the value of specialized government assets or non-financial service outcomes. The qualitative filter also requires strict verifiability. It is inherently difficult to verify prospective demographic forecasts and long-term sustainability metrics. Because future data cannot be verified today, the GPFR must explicitly disclose all underlying methodologies and assumptions used in the forecasts. Transparent assumptions allow independent observers to reach a consensus on the data's validity. Without these qualitative filters, the expanded scope of the GPFR would devolve into subjective noise, failing the test of accountability. We begin with the environmental foundations, move through the needs of primary users, and build an expanded scope of reporting. The IPSAS framework broadens the very definition of public sector accounting. It delivers this comprehensive picture directly to the legislature and the citizens. Strict compliance with this framework transforms raw fiscal data into a powerful, transparent mechanism, essential for achieving true democratic accountability. A government's financial health is defined by its capacity to deliver future services to its citizens, and the GPFR is the precise tool engineered to measure it.